Welcome back to the Crypto's Key Conversation. I came across this article from CoinDesk that says 5 essential questions about crypto taxes. And I know this has caused a lot of cause of concern for a lot of investors out in the crypto space. You just a lot of uncertainty on like how do I report, what should I report, what's a taxable event and so on. The best advice I can give you is make sure that you talk to your CPA or your tax advisor and make sure that you're up to date with all the laws and regulations in regards of your tax obligations. I know for me personally, I just do my best to track all of my my trades and my swaps or whatever, and make sure that I put them in whenever I go do my taxes. But don't be those people that try to evade paying taxes. You got to pay up your taxes. It is what it is. You want to protect yourself from audits and then violations when it comes to the IRS. Just like I always tell you in our videos here, this isn't financial advice. It's just kind of our conversation when it comes to crypto and kind of what's going on. In this one in particular, I thought it was important to kind of make a video on this, and I like kind of how this article laid out these 5 essential questions. So it says 5 essential questions about crypto taxes. As crypto has grown more popular, an increasing number of investors are puzzling over their tax obligations. The co-founder of the Smart Tax platform addresses 5 questions they are likely to face. So I'm just going to quickly come down to the questions. It says, question: do I have to pay taxes on my crypto even if I don't receive tax forms from my exchange? And the answer is yes. According to the IRS, virtual currencies as treated as property. When you sell that property, you must report a gain or loss. If you sold the crypto on an exchange over the counter, so OTC, or traded it to a friend or family member, you must legally report these transactions. Both on-chain and off-chain transactions fall under this treatment, including crypto that is transferred through local wallets. So the second question is, my exchange marked crypto I transferred to myself as taxable. What should I do? The answer was, many crypto traders have multiple wallets and transfer crypto between accounts. Ultimately, transactions among wallets you own and control are not taxable. However, the existence of multiple wallets can create headaches in tax reporting because exchanges and wallets lack context and may treat a transaction as a taxable event. To avoid problems, keep diligent records as you go, or white label wallet addresses. CoinTracker offers help tools for recording your crypto activities. Unfortunately, you will have to review transactions and individually mark them accordingly to ensure accuracy. So the overwhelming concept of this answer, I think, is just make sure that you're very diligent about your keeping your records, and that's what I say. I usually put mine through like an Excel spreadsheet. There's a lot of API integration style companies out there, and you can look into it if you want to take their route. But for me, I just kind of put mine through a Microsoft Excel spreadsheet. Third question here says, if I bought crypto with another crypto, is that a taxable event? And the answer is, a common example is the purchase of a non-fungible token where you needed a on-ramp to make the acquisition in either. Such transactions can be tricky because you must report your taxes in US dollars when both assets exchanged have a discrete unit of account. According to the IRS, you must determine fair amount value in US dollars when you made the transaction of both currencies and report the difference between your basis and the sell amount. If your exchange doesn't provide you with the documentation, or you made an OTC transaction, explorers and trackers such as CoinMarketCap and so on can be good resources. So yeah, utilize the resources you have out there, but like I said, just be very diligent about keeping records of everything. And if you're purchasing Ethereum and Bitcoin, and then you're purchasing an altcoin with your Bitcoin, that's a taxable event. So you just make sure that you're logging everything. Here goes another question. It says, is crypto that I received through staking or forking taxable? So it says yes. The IRS guidelines are clear that if you receive crypto from a hard fork, you should treat it as ordinary income based on the fair market value of that crypto when it was received. As stated above, unclaimed rewards are a gray area where you may want to consult a tax pro. Never pass up on an opportunity to seek professional help. Obviously, within our space, when it comes to regulations and reporting and the guidelines, it's still changing and adapting to kind of what this space offers because it's so new. But for the information that's out there, usually the tax accountants, they kind of know what's going on. You should also treat claim stake rewards as ordinary income. If you are staking outside of an exchange that documents the fair market value at the time of custody, you may want to use third-party tooling to help your documentation. So just track all your stuff diligently. Do your best. Is crypto treated as capital gains or income tax? So it says it depends. According to the IRS, crypto that is disposed or treated as a capital gain or loss, whereas crypto that is received through staking or forking is treated as ordinary income. There are some exceptions, including crypto that you receive as a bona fide gift or may be exempt. Tax platforms like April can provide the appropriate context and guarantee the accuracy of your filing. You should consult a tax pro if you have questions about your situation. Literally, that I think this should be like in big bold. You should consult a tax pro if you have questions about anything related to your tax obligation and reporting with the IRS. All in all, I just kind of wanted to bring this up just to bring out the conversation. If there is any confusion, consult a professional. I know for me, like I said, I just try to do my best to track everything from the time I purchased, the date I purchased, what I purchased, what I swapped, what were the prices, what were the fees, and so on. And then I just kind of put it all together and then, report it when it's time to report it. But yeah, I just thought it was important to bring that up, especially with tax season coming around. I know we're only getting ready to come in March here, or we're only going to be in March by the time you guys see this. But I thought it was important because April is going to be right around the corner. With all that being said, stay strong out there. Be safe.